Fear has been trickling into the Canadian real estate market over the past few months, and perhaps for the past year or so. But are these fears really warranted? Do we have safeguards in place that are going to keep us from having the likes of a meltdown of 2008, like in the US? As Canadians, we have always felt that there are safeguards in place that are going to protect us from that, and that that's not going to happen here. But we are seeing a lot of signs and a lot of indicators that may speak otherwise. I'm here to talk to you today about whether we should be worried, what these signs really indicate, and what can we do about those signs. My name is Marcy Verberg, and I'm a realtor here in Toronto. I'm someone with feet on the ground and also somebody who has multiple investment properties. So I can speak to you both from somebody as a real estate agent and also somebody with feet in the fire right at this moment. And I think that that might be important for you to understand. Okay, we're going to talk about a couple of things today. We're going to talk about what's happening with mortgages, what's happening on the street, and what the numbers said for October in the TREB board. I think all of these things are important, but I think you need to understand the context of what is happening right now in our market. Okay, so what is actually happening when you go out on the street? Well, we've had a huge increase in the number of listings in Toronto over the past month, dramatic increase in listings. Now, the board is also indicating that we have a price increase of 3.5%. And I'm going to come back to this and talk to you about what's happening kind of underlying that number. Let's talk a little bit about this mortgage environment, because we know right now the number one thing driving anything that's happening in this real estate market is related to interest rates. As we all know, Bank of Canada uses interest rates as a tool to try to slow inflation. But is that really happening right now? See, here's one thing that we have to concern ourselves with, and that's the fact that every time they raise these interest rates, they are actually increasing the cost of owning a home, which is actually in the basket of inflation. So they are actually in their own means driving up driving up the cost of homes and thereby driving up inflation in our economy. There are, in some ways, the policies of this Bank of Canada and also the government have contributed to increased cost of home ownership over the past couple of years. Now, what's happening with these mortgages? Because we all felt that these are pretty safe. Well, interestingly enough, I was actually looking at some articles from 2008. And at that time, we were talking about how we had just suddenly reduced the amount down that you need on a house and actually increased the amount of amortization that you're allowed to have. Because at that point, you were still only allowed to have 25 years of amortization. Now we're seeing up to 40 years amortization. Now, the last couple of years is really crucial in understanding this mortgage market. Okay, we all know 2020, 2021, huge increase in the amount of homes sold, huge increase in the price of a home. Those people all got mortgages at a very low interest rate. Now, what's happening that's going to affect us even more? 60% of mortgages are coming due for renewal over the next couple of years. That's 2/3 of Canadian mortgages are actually set to renew. Now, most of these people bought in a super high market with a very low interest rate. So I'm going to show you a chart and you're going to see here what the difference is. So if you actually understand that the average mortgage in Canada is around $700,000, look at that cost, the increase in the cost on a month-to-month basis. You're up a couple of $1,000s a month on your payments just by renewing your mortgage. That is a big hit for a lot of people. And a lot of people in the GTA owe more than $700,000. We are also seeing right now a significant increase in the number of people going to what we call a B lender. Now, an A lender is like your top 5 banks. You go there, they approve you, everything's tickety-boo. You know it's above board. Now, if you can't actually get an A-level mortgage, you go to a B1 or a C1. It doesn't mean it's a bad mortgage. It just means that it's more expensive and the terms may be more strict on your mortgage. So what we're seeing now, and this is from Stats Can, is actually that there's an increased number of people who are coming up to renew their mortgage that are now having to go to a B lender. Why is that important? The main reason that that is important is because that person 5 years ago qualified for an A mortgage. They also have a history of paying their mortgage on time for 5 years. And now all of a sudden, they no longer qualify. And that could be partially because now they have to qualify at about 8.5%. So say you could get a decent mortgage right now at about 6.5%. You have to qualify according to the government at 2 percentage points higher. So now you have to qualify for an 8.5% mortgage. Okay, so that is knocking people out of this market and sending them to a B lender. The second part of that issue is that if they go for something called a refinance, which means you kind of redo your mortgage all over again, they may find that what they paid in 2021 is too high versus now, and the bank might go in and appraise their house and say that it is actually of a lower value, and that also may cause them some problems in renewing their mortgage. Okay, so why is this important for people to understand if they are selling or buying or whatever they're doing other than paying their mortgage? Well, a lot of people are kind of pre-selling their home in the sense that they know they're coming up for renewal and they're not going to be able to pay their mortgage. So they're just getting ahead and they're putting their house on the market. There are also a few power of sales starting to come up. There's not a ton, but if you do a search, you will see power of sales. This is the first time we've seen this in a number of years. So either that means that and that's often happening with the B lender. So the power of sales that I've seen coming up are usually a B lender selling off the property. Okay, so that is very important. So those are starting to be additional houses coming onto the market. Then, of course, there's people who just need to sell because they want to downsize, they want to move to a retirement home, they want to buy a bigger home, whatever that is. Now, stay tuned because there are some reasons why it's a good time to buy right now also. But in terms of all of this mortgage stuff, with $900 billion in mortgage renewals coming up, we are worried that there's going to be a huge increase in inventory. Now, you may say, great, that's going to drop the prices down. Okay, well, that's good in some ways for people coming on the market. But consider this, are we going to suddenly try to unhouse a whole bunch of people who own their current homes so that we can put people in them at a lower rate? Does that make any sense? Not really, because where do those people go? They go into the rental market, increases the prices in the rental market for people who in the rental market really shouldn't have to pay that much money, because if they're in a rental market, they might be younger, they might be newer here, and they need to have a lower price. So sending those people off into the rental market is not really helping any of us. Another issue with this is that if we lower the prices too much and we drop the prices too high, the people who come up for renewal now, they're going to have trouble renewing their mortgage because, again, the bank appraises it too low. So these are a bunch of underlying currents that are happening. Now, for somebody like me who's kind of on the feet, getting emails every day, what I'm seeing, which is really crazy, is big issues with pre-construction. So that means that I put some money down to buy a house that's not built yet, or a condo that's not been built yet. I'm paying gradual payments to my builder. And when this building is finished, I need to close, meaning I need to get a traditional mortgage from my bank for that building. Now, the price I put down a couple of years ago in 2021 as my agreement is now too high. So now I can't close. So we're seeing people walking away like crazy from condo down payments. They're losing hundreds of thousands of dollars, and these condos are coming on the market. I'm getting emails daily with assignment sales available for people to purchase. These signs are not saying that we have a lot of good things happening in the market right now. So these are things that I think we have to see as indicators and to be careful of. I want to point out something that one of the experts has said to us. There's a person called Royce Mendez. Now, he is saying that if we do not get these interest rates down in 2025 and 2026, we are going to see some very, very harsh years. What he's basically saying is that we need to get these interest rates down, right? But in order to do that, the Bank of Canada wants to see inflation under 3%, and they want to see unemployment under 6%. Well, we're 3.8% for inflation, and we're sitting, at least in the GTA, at around an unemployment of 6.5%. There is huge, enormous pressure on this Bank of Canada now to get these rates down. So a lot of the experts are telling us right now that we can expect to see a rate decrease coming up in 2025. Now, of course, we don't have a crystal ball, and I'm always going to tell you, go talk to your mortgage broker when you're deciding on something to do in terms of your mortgage. I'm hearing a lot of them are saying, and this is my personal opinion, and this is what I did, was to go for like a shorter term renewal because we hoping and we pretty sure that we're going to see some sort of a rate decrease. So that's some information for you. All right, let's talk a little bit about what's happening in the GTA in terms of our prices and our sales. Okay, so you have seen that we have an overall price increase of 3.5%. That's including all of GTA, okay? You've also seen that we have a decrease in the number of sales of 5.8%. We've also seen a bit of an increase in inventory. Now, the average price for the whole entire area is up about $24,000 versus October of last year. Okay, so we're saying we're good. The prices are up a little bit. Now, what's really interesting, actually, I'm going to just talk about general numbers. And if you want to hear about your neighborhood, I'm very happy to send you your specific neighborhood, because I think if you're selling, you need to know what's happening in your neighborhood, because the GTA is really big. But overall, what we're seeing is detached houses in the 416 area code are up 8.2% in terms of prices, and up 4.7% in the broader 905 area. In terms of semis, the price is up 4.7% in Toronto and flat in the kind of 905 areas. And condos, of course, are down about 2% in the Toronto area. The question is, are we going to see these prices hold or slide? Now, one of the things is we're comparing to last year when we had very low inventory at this time. The inventory, meaning the number of houses available to purchase, has really significantly increased versus where it was last year at this time. Last year was on kind of a historical low. We also know, it was, by the way, that was at 1.3 months supply of inventory at that time. We also know that from August 22 to kind of January of 2023, we had a big, not a big slide, we had a slide in prices. January kind of being that trough. And then since then, we've been seeing the housing prices increase. Now, keep in mind a couple of things. The housing interest rates have come up significantly since then. We were at a low in terms of interest rates when we were comparing some of these prices. We had low amounts of inventory, so things have really changed. So some of the big experts, they are concerned that we still might see a bit more of a trough in terms of prices. Okay, so should you sell? Should you buy? What should you do if you're thinking about doing any of these things? Okay, some people should not sell right now at all. If you don't need to sell and you don't want to sell, then probably wait until the spring market. If you need to sell, then you need to work with somebody with boots on the ground who really understands what's happening, so that they can get out there and use some really good strategies to help you get your home sold. Right now in this market, I would not cut corners in any way. What I would do is, stage your house to the max, make it absolutely beautiful, do the absolute biggest marketing program you can do. Do not just throw it on MLS and hope that your home is going to sell, okay? Now, I do think some people could sell because it could be a really good time to take advantage of this market. So if you own a smaller home and you want to upsize, and you've heard me say this before, there are some great opportunities for you to take advantage of moving to a bigger home at this point. If you're ready to go with your down payment and it's your first home, I also think there's some good opportunities for you, especially if you're thinking of buying something like a condo. There's tons of condos on the market right now. What that means is a couple of things. You can actually negotiate the price for the first time in a long time. You can also put conditions in on your offer. So if you're going to do an offer right now, please put conditions on. Let's not do offers with no conditions in this market. You don't need to. There's very little competition. Once in a while, if it's a really great home. For the most part, you're going to go in with conditions, and you may even be able to use some of the older ones. Some of the agents will say to you, we haven't seen an offer that has a condition on the purchase of your own sale of your own home in like 23 years. And that's kind of true, but we are seeing that condition can be used in some cases now again. So that's an opportunity. If you're somebody who wants to make an investment, we're starting to see some good stuff coming onto the market in terms of investments. A little harder right now to make your cash flow work, but there are some opportunities there. So if you have any questions and you want to chat about this stuff, my information is below. I would be totally happy to help you out. I would be totally happy to answer any questions. So feel free to reach out. Also, if you can do a little like and subscribe so other people will see this channel also, that would be great. Thank you so much.